What's up, everybody? Good morning. How's everybody doing? Good morning, Ray, Johnny. L3 enter, Leanter. Not sure. Daniel, Lewis, Lo Feynman. Good morning. Welcome in, everybody. How's everybody doing? Good weekend? Feeling refreshed. Justin, good morning. Welcome in, dude. Blair, welcome in as always. Kiowa, good morning. Laksh, good morning. Welcome in, guys. Nice to see you all back. Monday morning, bright and early. Get into the analysis here in just a minute. Joe, good morning. Welcome in, dude. Jose, good morning. Welcome, bud. Nice to see you back again. New week. We've got that FOMC and NFP out of the way now. Couple medium impact news things this week, but not too crazy. Certainly not like we had Mag 7 earnings, NFP, FOMC rate decision. Last week was like the Super Bowl of high impact news for the markets. Yeah, no significant news planned for today. So it very well could be slow, but never know. Things can happen when least expected. Good morning, Steve. Welcome in. Welcome in. Got a few things marked out here on my blank drawing set. I've already gone through around 5 a.m. this morning. Started going through stuff. Good morning, Richard. Welcome in. Start getting into it in a minute, but I have my normal, intraday levels and stuff. I've cleaned this up a bit. There's still a lot more noise on here, but I guess not really. If you think about this is a daily chart, like I don't have that many levels and stuff going on all over the place, but for the purpose of this, I'm just gonna I always start out every day going through blank charts, going through new analysis, fresh eyes, especially at the beginning of the week. I think it's super important to just kind of pull up some blank charts, no indicators, no analysis. Just one of the most important things is just developing your own market context based on experience of the conditions and the setups that you look for and everything. And to me, like one of the most key things that I do for my own process every day is just go through blank charts and just, it's hard to describe it, but just get a feel for the markets and then start doing my analysis. And that helps me not get like too locked in on the same levels, the same thing day in and day out, and kind of lose sight of current conditions, things that may be changing and shifting in the markets. You don't want to like stay super locked in the same levels, same things every day, and then never really just like go completely like blank on the charts and just kind of zoom out and have a fresh look. And I do that every single day. Good morning, Chi. Good morning, Daniel. Stelios, good morning. Welcome in. How do you make blank drawing set on TOS? So in the bottom right-hand corner, there's these drawing sets. You just create a new drawing set. It's going to be blank. I have this one labeled as blank because I always like clear it out constantly. And like every day I clear it out blank and go back to it. And then I have my regular intraday trading one, which I typically I'll pull it up on two screens. So one screen I'll have my blank stuff, and one screen I'll have all my levels, and then I'll kind of clean up this as I go through the blank charts, if that makes sense. So I'll clean up my levels and stuff things that I are like, you know what, actually that's not really relevant anymore. Let me get rid of that, and etc. And then I have a different drawing set. I haven't used this in a while, but for like looking at just like kind of long-term trends and analysis, and then a back testing drawing set and stuff. Just so I don't have to mess up my main trading levels and my main trading stuff when I do back testing or when I'm looking at longer term analysis and things like that. So I recommend using this feature to create drawing sets. Love your live streams. Thanks. Thanks, JWRFX. Life Buddy, good morning. Welcome in. Alessandro, welcome. All right. So we'll start going into the analysis for the day. Pretty simple stuff. Just looking at the daily time frame. I'll just start here. I do look at, yeah, good morning, Jorge. Welcome in. Glad you're here. I do look at the weekly too, but honestly, like the most important thing for me is just kind of starting out with the daily. I go through the daily charts, the weekly, the daily, 6 hour, 4 hour, 1 hour, and like 15-minute. There's some time frames in between there, but I kind of get most of the information that I need from kind of developing a feel and context for the market from those. And then intraday, I kind of am looking at just the 15-minute chart and the 2-minute chart. I don't trade off the chart. I'm just kind of using that for structure and location and analysis of price action. All my trading is based on order flow, which I see on Bookmap and on the footprint chart and on the time and sales. All right, so getting into the analysis here. So since April, market has rallied, been on a very strong uptrend, right? There's been very limited pullbacks, and those pullbacks have just been opportunities to be a buyer, and the market has rallied higher each and every single time. A little bit of new information last week. We had this consolidation period for about 2 weeks, and then we broke out and made new all-time highs. That all-time high breakout was fairly short-lived, though, because last week we kind of were mostly sideways. We popped new highs to start the week, and then mostly sideways for the week, and then kind of a bearish thing to poke new all-time highs a second time, swept out the highs, I believe on Thursday. Yeah, this was Thursday, Friday. So he swept out the all-time highs, double top, and rejected sharply lower, and then continued lower. So bearish pieces of context, we double topped, and we swept out the highs of when we formed that double top, and then rejected sharply back lower, and that move had a continuation the next day. And then the third piece of bearish context is that we kind of recaptured back inside this previous consolidation range, and we kind of triple bottomed. I marked this as like a triple bottom level that's been supported now, and it also was just a little bit above this trend line that I'm watching here on the daily time frame. You can see we've held this 2 times. This was the 2 most recent swing lows on the daily chart. 2 most recent swing lows on the daily chart formed there, and that has held. We held just a little bit above that and right at the bottom of this consolidation place. So in my opinion, coming into this week today, and I said this last week too, we're kind of at a key kind of inflection point in the market right here. If we don't support these higher lows and start rallying back up towards this kind of consolidation area up here above like 6400s, then we could drop much lower back towards 6200, 6100, in my opinion. So things that I'm watching for going in today, we'll drop down to the 4-hour time frame now. We did spend a good amount of time consolidating down here Friday afternoon, and sellers were really not able to completely break the low of this consolidation range. So I'm kind of viewing the current price location as a bit neutral, because on the higher time frame, we are still, this is that daily trend line down here. We're still very much making higher lows. We're still very much near all-time highs. So there is still the higher time frame uptrend that hasn't really changed substantially, like just not a bear market by any means. But in the short / medium term, there's been quite a bit of selling. We made a double top and rejected lower. We recaptured back inside this previous consolidation range. So there is some bearish indications in the short to medium term. That could fail, and this could immediately shoot all the way back up here. That's what we've seen a million times, is that taco trade, that V-shaped bounce all year this year, all year last year. Every sharp drop has turned into a V-shaped recovery in a very short order. Even that massive selling to start this year, since April, reversed all the way back up, like one of the fastest and craziest V-shaped bounces. So shorting for downside continuation, especially like break and retest downside moves, has not been the trade this year or last year for me. In fact, like 90% of my profits have come from like bottom reversals. So I'm cautiously watching this. I'm not like looking to short lows at a breakdown by any means. I'd rather just kind of sit out and wait for new information to develop. But we can't ignore the fact that in the short to medium term, bears have shown some strength that we haven't seen in a while. This is probably the strongest drop, just looking at the daily chart, since April. I don't see a 2-day drop this large really since April, mid-April. So that is important to watch, especially because of the information that I just went over leading up to that, which was we double topped at all-time highs. We swept the highs and rejected back into that prior consolidation range. Like if bulls were still very, very strong, I would have wanted, like I said last week in my trading plans, I would have wanted to see bulls hold at the top of this prior consolidation range, near this, above this 63.30 level, above the 63.50 area. But the fact that we dropped all the way back down to the lows of that prior consolidation, we didn't break them. We didn't like break strongly under them. That could happen today. That could happen this week. But so far we didn't. But just the fact that we did get so deep into this zone, and just, this is a daily chart, but imagine this is a 1-minute chart, right? When you see a consolidation and then rally, base, rally, if you're looking for continuation on that move, generally I like to see the upper top portion of that consolidation period hold for a continuation move. If bulls are continuing to stay very strong, we're continuing to see that uptrend continue. And if we don't, and we get all the way down towards the bottom of that zone, it still could work. I'm not saying it's not going to work. It's just a little more iffy because, and that's why I'm saying that I'm a bit neutral at current location and everything, just because there's some signs of strength from bears. Bulls really didn't step up in a big way to defend up here in the upper part of this consolidation range. So we need to just kind of be cautious and not like overly biased one way or the other. So hopefully that all makes sense. So getting into more of the game plan for today, like I said, I'm pretty neutral at current location. I'm watching for both up or down price movement. Anything could happen, anything could develop. So I'm very much just keeping an open mind as always, but there are certain conditions and times where I will be leaning one way or the other. Not that I'm only willing to see that, but you know, I always look to go with momentum, go with the trend, and find short-term reversals against that to get with the move. So the most near super key areas that I'm watching is, like I said, this daily trend line, the two most recent daily swing lows, which also lines up early this week with pretty much the lows of this prior consolidation range, where we pretty much triple bottomed around the 62.40 area. Drop down, so you can see we touched that level. It was like a double bottom area. It turned into one there and then two over here. That was kind of that last dip before we broke out again. So one touch, two touch, now that's the third touch, and we've rallied back towards the highs. So to the downside, and let me drop down again here. I really would, because we've already triple bottomed off that, I really would be cautious if we get all the way back down there again, unless we like fake out under it and then bounce off this trend line a bit below. I'd be very cautious right at this. If we come down there again, that's pretty bearish, and there could be some trickery at play. Looking at this 1 hour time frame, this is what I was talking about. We can see quite a bit of consolidation here, pretty wicky. Late Friday afternoon, bears couldn't really get continuation below that consolidation range, and bulls really couldn't recover the day either. So we just kind of flattened out there to end the day. So looking at the consolidation range, then when the market opened up Sunday night, last night, we rallied above that, off that range, pulled back and held that range right here. And if you look at that, that's right above that consolidation range where we consolidated. So that's like the first, if bulls are going to have a chance this morning, I would really like to see us not spend much time below this level around 62.80. If we come and really into there, so 70 to 80, if we drop into there quickly this morning, I would want to see a quick drop, fail, and bulls quickly recover above that. And if they do, then I may look to just not big crazy continuation, but scalp a bottom reversal in here and just target pre-market highs. And then if there's a really strong rally coming off that, then the first area that I'd be looking for is up here into like the 6330s. 6300 too could react, which is okay. So that's like pre-market highs into 6310. So for long side plays, the first thing that I'm looking at would be if a dip into here occurs, bottom reversal, target pre-market highs, target 6330s. If there's a lot of momentum right off the get-go, again, long side play, if there's a lot of momentum right off the get-go and we hold really this swing low that formed right here above 6,300, above like 6308 here. So if we can't even break under this little pre-market swing low that formed, you can see we based, rallied, based, or potentially could rally again. Then I might take like a little morning momentum setup. Either if we can't break under here, or if we break out over here, retest and hold above 6308 here, 778, and then just target probably like that 6330 key level. If I don't catch that, and we do rally up here, if I just don't see anything good, I will be watching up here to see if sellers reload around 6330 and under this trend line that I didn't mention this. So 4 hour time frame. I'm kind of watching this trend line here. We formed a couple swing lows here. We bounced off it 1, 2, 3 times. And then after we broke under it, we retested it here and failed. So it was a lower low trend line. And then we formed that double top at the all-time highs. And then once we rejected back under that lower low trend line, it acted as resistance and we sold off from there. And this was really the only kind of structure that I saw on the 4 hour and 6 hour time frames where there was any kind of bounce. So looking at the 4 hour in 2 days, this was the only green candle. So, and that was under that trend line after we basically did a break and retest under that trend line and then rejected lower for another continuation down on Friday. So that trend line is now down here, which lines up. And here's another level to talk about is the 50%. I'm going to kind of get rid of this stuff because it's just, don't need all this. So this was the 50% or roughly like where this kind of buying started here. So it was kind of like almost a measured move. Buyers tried to bounce there overnight. They didn't. And then we got almost the exact move continuation. If I draw a fib here, just from those highs to the lows, you can see that 50% is right there around that level. I just marked it at the low of this candle. Again, I'm not like a big Fibonacci retracement trader, but I do look at like the 50%. And so that was pretty interesting to me that we dropped, we based here and then rejected lower. And that was like almost to the tick, the 50%. So if we do rally, the two places that I'm looking to either use as a target or as a possible reversal, if I see signs from sellers, is this 63.30 and then this trend line, which will line us up somewhere around 63.50 and into that 50% retracement level, which is 63.55. If we get above there, tough to look to short. Maybe if we sweep above these highs here into 63.70s and fail below like the lows of this. So if we get above 63.70s and we still reject, and I see strong selling below 6,400, then I may look for a top reversal up there. But I don't love it quite as much if bulls take us all the way back up there. All right, I think that's a full game plan in a quick and dirty 15-minute overview. Anybody have questions on that? Let me know. Market consolidating at 6,300. Yeah, there's a 50% fib around 53. Yeah, that's right around this level that I just talked about. Good morning. Good morning, everybody that joined in. All right, so that's the game plan in a nutshell. Drop this down to the 15 minutes, what I kind of watch. Go to my levels here. So you can see near term, this is what I'm watching. If we get that dip under this 79, but above 60s and definitely above this old all-time high level that I still have marked at 58. So if we get a dip under there that lacks continuation, I see significant absorption and aggressive buying, that I may look to scalp that long and just target these pre-market highs around 6,300, 6,309 first. And then if we break strongly above there, then maybe look to target these 63.30s. If we did a nice momentum break and retest above here, and we may go and retrace all of Friday's selling. So I may look to take that long and target these 63.30s on a quick like break and retest scalp. If I don't see any of that and it does rally anyway, then I may just look for sellers, see if they want to reload here around these 63.30s, around this trend line, around this 50% level. I don't have a ton of plans for break and retest short downside. Like I said, I've been really cautiously not wanting to be a part of trying to short the lows for continuation lower, even a break and retest. But it could happen if we do strongly take out these 62.80s and there's just significant selling and a retest fails, then I could potentially look for that short and target probably Friday's lows, 62.58 into Friday's lows. But I really just shorting downside continuation just hasn't been the move 9 times out of 10 for the last year and a half. And also shorting for continuation once we start making the V-shaped bounce. So that's why I'm like saying, like, if we rally up too high above these levels and I don't see really significant absorption and selling, I am not going to fight the V-shaped recovery while we make our way all the way back to all-time highs again. Makes sense? Quite a bit of price oscillation here, just messing around this 6,300s consolidation area. I had 6,300 marked because it was just kind of a key whole number, but I removed it this morning because it's just noise at this point. Good morning, Kellen Rock. Yeah, it helps me out a ton if you guys appreciate this kind of analysis and going through this stuff with me. If you like and share on the live stream, appreciate that a lot. All right, I'm going to switch my screen over to Bookmap for you guys. We'll watch this. I have some cool ideas for live streams potentially next week or later this month. I have some little series that I may do with you guys that I think might be fun. And I have some more videos to make for longer format. I primarily post a lot of like short format stuff on Instagram. So if you guys want the latest stuff from me, X and Instagram is where I post like the most up-to-date stuff. So I recommend checking that out. But I have some more like longer format stuff that I think you guys will get a lot of value out of that I'm going to do on YouTube. As far as volume profile goes, there is quite a bit of low volume on that sell-off that initiated above Friday's highs pre-market, so above like 63.30 into 63.45. Pretty significant low volume area on that sell-off because mostly it occurred overnight. So like most of that selling was between like 1 a.m. and 3 a.m. on Friday morning. So naturally that is a lower volume area there. But that's another kind of interesting point to make about watching that location specifically. So a lot of buying right off the rip here. It's a little tough for me to jump in it though right off the get-go here. So see if we get a little pullback or anything that makes sense, but I'm cautious to like jump in the rally right off the go. We'll see if we kind of take out these overnight highs here, which we just almost touched around 0975, and pull back and see what happens. But if there is a lot of momentum here above 6,300, we're above those 07s now that I just talked about. If I can see that momentum continue, I'm down. Like right off the open, we just made like an intraday low volume area on that quick aggressive bounce between 04 and 07. So right here where you can see we swept higher. So if we pull back and I see something significant there, I may scalp that long and target a break out of that 63.09 area that I talked about. It's kind of that overnight high. And probably target into those 63.24s into 63.30. A lot of excitement from buying here right off the rip. A lot of excitement. So we did kind of get that break and retest set up there on those 63.09s. So I jumped in long on that at 63.10. I don't normally like to get in this fast with a stop loss right under 63.08 where there was a 238 lot negative delta. I'm going break even with my stop loss already, like only seconds after entering on that, just because I want to see this momentum carry. And if it sweeps lower below my 63.10 entry, then I'll look to get a better entry. But we saw this aggressive buying that left this low volume node area. intraday. We pulled back into it. Those sevens, when I saw this aggressive buying step in, I jumped in long here on this large buying and then stop loss into there. But I'm immediately trailing that stop loss up with me because on a momentum breakout setup, I want to see this pretty much continue straight up into my target into the 20s. And if we pull back substantially back down below my entry, then I'll just look to get a better entry. Kind of hands off right now. We'll just let it go. It was a 2-point risk though. I'm almost up 5 points. I may take the quick scalp here in just a second with half profit for about 5-6 points. That's about 2.5, 3R on the trade. All right, I'm out half there. Still break even risk though, 5 points, so it's 2.5R. Nothing crazy, but stack a small win, get the day going. Nothing crazy. I still have my main target at like 63.29. A lot of buying off the get-go, so I'm just gonna chill with this. I already took half off for 2.5R. 5 points on a 2-point risk. A lot of momentum. A lot of momentum here, so chilling. If we go take out the 63.24s here in the next few seconds, then I may go ahead and take this off. See what happens up here. I'm already up 9 points, so it's 5R now on this, almost. See this offer here at the 20s. If we sweep above this, I may go ahead and just take this off here for a nice opening range momentum scalp. Would like to see this hold above these 16s now, where we had just that low volume rally here. There we go. Nice bit of momentum above 20s. This offer is reappearing now. So one more pop. All right, I'm all out there. So 11 points on that second one. That's like 5.5R. That was 2-point risk. So 2-point risk on that setup. The reason I'm taking it off there is look at this large buying that just came in and see how this offer appeared, got filled, and then he reappeared. So this is a passive seller here. I don't know if we may go and break through that, but given that I'm already up 5R on the trade, there's no reason for me to get greedy. My entry was at 63.10. My stop loss was under 63.08. I took half off for 5 points. I took another half off for 11 points. It's just a quick little momentum scalp. I talked about it in the pre-market, and I was going to target the 30s, but see on the heat map how we have this offer appearing here at 20s. That was an area that I was watching too, like from that selling on Friday. We might go break out above it, but I'm okay. Like I already took my piece. You know what I mean? It's a net overall, like after my scaling, it's like 3.5, 4R on the trade. 2.5R and 5.5R. So what's the middle between that? Like 3.5, 4R, 3.75R. I don't know. I'm just doing quick mental math. But yeah, we may go strongly break out above this now. But my goal with that was just a scalp. I wasn't looking to catch like the bottom of the day and have it rally all day. I was in and out, 2-point risk, 5 and 11 point reward. My stop was under 08s because I saw significant selling there, 238 lot negative delta at 08.50. So actually my stop loss was just below that at 08.25. So my speculation based on my entry was those sellers were already trapped. We have no reason to go back down there. Buying is coming in, so it's going up immediately. So that's why I got my entry at 10. Initially, I gave it a little bit of room to breathe at the 08s. And as soon as we pumped, I dragged my stop loss up to break even, because I'm speculating, like, I see these sellers trapped right now. Aggressive buying is coming in right now. So this trade is going to work out right now, or I'm wrong. You know what I mean? So I'm right in when I see my confirmation. And if the second that pulls back on me, my confirmation is wrong, because I spotted the trap sellers. Now I'm spotting the aggressive buying. I have no reason to hold the risk anymore. If I'm right right now on a scalp setup like that. Again, I scaled out for 2.5 hour, 5.5 hour. And yes, we may continue higher from here, but I don't have a method of forecasting that. So once we're up above 20s or near 20s, that was like my second target, 20 to 30, that area. And I'm trailing my stop loss along the way. So you guys heard me say, I see this low volume area above 16s. I don't want to see us get below that. So I trailed my stop loss up to my first target. So guaranteed the trade was already 2.5 R, because I took half off. We popped again. Then I trailed my stop again to my first target, which was 2.5 R. So it's a guaranteed 2.5 R trade no matter what. And then once we got up here, this second area that I was starting to be cautious of watching, I saw this offer up here. I let it pop one more time, and I continued to see this passive selling, this offer up here. So I took it all off. 11 points. I'm good with that. 5.5 R, because that was the goal for the trade. I wasn't trying to catch a trending move for the entire day. You know, I look to catch 2, 3, 4, 5 plus R in a couple minutes. Especially, I took that trade off like this, the first minute of the opening, 9:30, like that first minute I got in that trade. So to hit a 5R target in the first minute after the open, I'm cool with that. That's a one and done type of day right there, guys. Any questions? Everybody see what I'm saying? Here, let me talk you through it on Bookmap here. Again, I'll recap it again really quick, and I'll film a recap for you guys and post it on Instagram, and so you can see exactly what I saw for the trade. Again, remember in the pre-market, I said, if bulls are going to be strong today, I want to see it early and right away. So either I want to see a dip down into that area, like a sharp aggressive dip down into that area, and bulls immediately bounce it and recover above Friday's lows. Or if we continue this higher low structure that we're seeing all night overnight, which we did, and we quickly bounce with aggressive buying, and we can't even take out that little pre-market low from 8 a.m. Again, this was a scenario from the pre-market session that I just went over with you guys. If I see a good momentum setup, then I'll look to take it if we can hold at above 6,300, above 6,307. That's what I said. Like word for word in the pre-market, I said, if we can hold above that 6,300 and specifically above that 6,307, then I will look to take it long. And we did. We made that low volume area on this rally right off the open, which immediately told me there's buying momentum coming in. We swept higher with aggressive buying right off the open. We pulled back. And when we pulled back and held here right at 06, just a point under that 07 level, and then we started to rally, this would have been a better entry. This would have been a better entry and put my stop under this buying here. But because it happened so fast in the first minute of the market being open, I said, okay, let me see that buyers want to continue this move, and then I'll put my stop under this low. Not under this low. I'm looking at my footprint chart to where I saw that. Here, let me see if I can show you that on the DOM. So this 238 lot negative delta right here, that is what I based my stop loss on. So when we bounced back aggressively above this area, this is where I jumped in long here, right at 63.10 on the dot. And then I put my stop loss was right under this 238 lot negative delta, because on this drop here, that told me that there was already trapped sellers here, 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 and we're trapping them and rallying. So when I already see the trap and rally, there's no reason that we should, if I'm right, there's no reason we should go back below those trap sellers. So my stop there was 1.75 points. I got in at 10. My stop loss was at 0825. So a lot of times it's I don't call the exact thing, because I place my order with an OCO order, and then I'm almost not even looking at the actual price on the right side of the screen. I'm looking at my footprint chart of where buyers and sellers are, and that's where I'm dragging my stop. So I'm not even looking at really price specifically. I'm looking at my chart and seeing exactly where trap sellers are, exactly where aggressive buyers are, and I'm putting my targets and stop based on that. But looking at Bookmap here, you can see this is where I bought in. I kind of bought in with the momentum. And because I bought in with the momentum, I had no reason to think that price should come back below those trap sellers. Again, that first target was just a 5-pointer. And so you can see this large offer here at 15. That's where I took half off, just to I didn't really have a good technical reason to do that, but just because it was a little momentum scalp, it's 2.5R. Once my minimum threshold for trades that I take scalps is 2R. So once I'm up over 2R, especially on a quick little scalp like this, I'm looking to be out. So I took half off there. Maybe I could, yeah, in hindsight now, I could have kept holding it. I could have kept holding the whole thing now. You know what I mean? Everything's crystal clear in hindsight. But my trade management system, first target, 2.5R, out half, trailed my stop once we broke out above this. So this became my stop loss. So now the trade is a 2.5R scalp no matter what. Then we came up here above those 20s. And you guys remember I was talking about this in real time. I saw these offers pop up, this aggressive buying. I watched this once. And then when we popped up above here again, I took it off for 11 points. And then we kind of consolidated. There was some selling that tried to come in. So I was not wrong. We did see that selling come in. I was not wrong for that was a valid take profit, but that selling just didn't last, and we squeezed higher now. So yeah, could I have capitalized more? Yeah, we are going for that 30 level, but I saw reasons based on order flow, based on my system of where I take targets, where I trail my stop, etc. And again, keep in mind, it was 2-point risk. Actually, it wasn't even 2-point risk. It was 1 3/4 of a point risk. Jose just got out at 63.29. Nice. Usually put my stop loss above and below highs, patterns. So there's nothing wrong with that, Blair. This thing is blasting, man. Damn. This is where you have to not have FOMO. Just, I caught my piece of the move based on my levels, based on my entry methodology, based on my system of how I manage risk. And whatever happens from here is just not for me. You know what I mean? I already caught my piece. I already did my work. I'm already done for the day. So it may keep going higher. It may reverse and go back lower. I don't give a shit. Doesn't matter. So but early on in your trading journey, you see, not even early on, even still now, I'd be lying if I don't have a little bit of FOMO, like, damn, another 10 points now from where I got my second. But you know what I mean? It's like, you can't allow that stuff to creep in your mind. I had reason to take it off here. I saw offers appearing. It was a quick scalp in the first, like my second target was all out like 6 minutes into the open. You know what I mean? So there's a lot of volatility there in that first, there's a lot of volatility there in that first 5 minutes. So it easily could have come back and swept out my entry break even. And then I'd be saying, wow, I just let an 11-point winner go back to break even in the first 5 minutes. I could have been done. How stupid. You know what I mean? But there you go. If you did keep holding, I could have taken another 20. I guess what I could have done differently, if I have to if I have to perfect myself a bit more, is I could have taken a 25% off there and then held, because we were seeing so much buying momentum, and held another 25% for the 30s. But it is what it is. You guys got the levels. You saw the game plan. We literally went from key level to key level. I told you if we break above those 07s, going in the direction of those 2930s, and that's where we went. No shit, right? If the market's going up, it's going up. All right. Nice. Wins all around. Do you guys not hear my audio? Do you have to subscribe to get the audio for this stream? I'm not sure what you mean, Ethan. I see my audio bumping on my end. Do you guys hear me? Or are you just trolling, Ethan? Okay. Yeah, I was going to say, I see my little dots moving of my mic. Okay, cool. Ethan's trolling us. No, you might have the wrong audio source selected, Ethan. How do you define if you look for a quick scalp or for a longer ride? Can you explain? Good question, Kellen Rock. If you guys remember this morning, I told you I don't have a strong directional like bias today. It's in a very neutral location for me. So I went through all of that analysis this morning to share with you guys that I have kind of a neutral perspective on where price could go from here. And when I have a fairly neutral perspective, then I'm looking definitely to be in and out of quick scalps. That is, whatever the context I'm viewing the market as, if it's a balance range market, anytime I don't have a very clear directional, like there's very good reason to believe that this uptrend will continue or this downtrend will continue, which is over half the time, I look to just trade quick scalps in a few minutes and in and out. If there's a very clear trend, markets are very strong, the whole market's trending like ES, NQ, the Dow, YM, then I'll look to expand larger targets and catch more of a trending move and leave, runners on for more of a trending move. But I did not have that clear directional play today. If you remember, I went through both long and short potential setups. I had a very neutral perspective going into today. So I was looking to just catch a quick scalp from one key level to the next key level and walk away. Again, I'm still I size down for the live streams. I normally trade like up to 4 or 5 ES contracts. I was just trading 2 contracts. So I made like $800 on a $175 risk in 5 minutes. I don't know. People go to school for a long time to make $800 in 5 minutes. I don't even know what you could go to school for to make $800 in 5 minutes. You can't even be a neurosurgeon, probably make $800 in 5 minutes. Maybe you can. I don't know. And I'm an engineer, right? Like I have an engineering degree. But I do this. Only athletes, yeah. And that is why like the barrier to entry to trading is so low, but the actual skill required and work that you need to put into this is like a professional athlete. And you have to earn it every day like a professional athlete, actually even more so than a professional athlete. Because a professional athlete, yeah, they have to continuously work to perform, but they're on a contract, man. They're making money regardless. And this game, it's just as competitive and just as difficult, but there's no contract unless you work for a real prop firm and you're on like a salary and a commission split. But if you're just a trader for yourself like I am, then there's no salary, there's no contract, there's just what you make from your own earnings, and that's it. So it's like a professional athlete that has a 100% performance-based salary. I guess kind of like golf. Golf is kind of like that, but they get sponsorships, so that kind of helps. But it's probably more like golf in the sense that you don't really have like a contract salary with the league or anything other than not live golf like PGA. I don't know. I'm more of a baseball person, but if you've got any tips, Matt? I was trading full-time, successful, but things happen in personal life, and I'm back now after 9 months. Didn't follow the market at all and feels overwhelming. Take it slow, Appy. Take it slow. Don't rush into anything. Keep your risks small. Just get a feel. If you had a successful trading career before, there's no reason that can't work again. Just take it slow. Don't rush into anything. Need to get better at momentum breakout setups. That's probably another reason that was a quick scalp for me too, is those momentum breakout setups for me probably account for like maybe 10% of my trades. Probably 90% of my trades are reversals. And so I do have a playbook for that. And I do have very clear, like exactly what I showed you guys today. So I do have that in my playbook, and I took it today, but that's like I don't have so much of a feel for that trade setup because that is probably like less than 10% of my trades are those momentum scalps. People call them like opening range breakouts, ORB. I don't really call it, to me, I just call it like a morning like momentum breakout setup. Yeah, Appy, maybe I'll share on my playbooks someday. Share a little more information. But drug smuggling 101. Do you trade under a personal account or under an LLC? Under a personal account, but I may be moving towards the LLC thing. But it really, you start to incur a lot more business costs with the LLC. You have to pay for like professional data and all this, that. It's very advantageous from a markets and stuff perspective to just trade as a non-professional. Obviously, there's tax benefits to flowing money through an LLC, though. But futures, honestly, are already very tax advantageous because you're not having to pay full short-term capital gains. It's partial short-term capital gains. Like even though you're in and out of positions intraday, it's taxed as partial capital gains, partial long-term gains. This is not tax advice. This is not business advice. This is not trading advice. I'm just sharing like what I do for education and entertainment purposes. Don't copy me. Nothing I say is all of the legal disclosures, guys. Don't believe me on anything. All right, guys, so I'm going to work on making a recap. I'll share it on Instagram. Nice short session today. Honestly, we've had a lot of like 2-3 hour live streams. I'm sure we'll have more this week, but this one's going to be shorter. It's a one and done day for me today. What I'd be watching for going through, obviously, there's a lot of momentum going right now. I wouldn't be looking to fade this. It's tough to see another setup. I'd be looking for a pullback. There's a lower volume area around 63.16 that I called out. So if we see, I'd maybe be looking to see if a pullback to around 63.17 to 15 area holds. That'd be kind of a deep pullback from here, though. We're already up at the 35s. So it's just kind of if you don't get in early on these kind of momentum breakout days, it's really hard to be a part of it because you don't want to fade the momentum. Like I think based on the context that has set up so far, it's a lot more difficult for me to look to short. I don't really want to go against momentum, and I also don't really want to chase. So a lot of times, guys, if I'm being honest, if a really strong momentum day happens like this early, and I don't get a part of it early, even a piece like I did with a scalp, then I have a difficult time like being a part of the move that day. Because some of my worst days have been, my worst trading days have been like continuously trying to fight a trend for a reversal. That's not a good move. I've paid my dues for that lesson already. So I don't need to earn that lesson ever again. So I don't like to do that. And longing for continuation without a clear like pullback and area to base risk around becomes more difficult. So a lot of times I go pretty hands off when that happens. I don't expect anything, Ethan. I'm just saying, like, if it did pull back, I'd be looking for a pullback to hold above probably 16 to 20 area. Just call it 15 to 20 area where I took my 2 scale outs for my trade. I'd be looking for a pullback to hold above that. Technical level wise, we just broke out above that 29, which was that pre-market high from Friday. And it was just a key level of technical analysis that I went over in the pre-market. So maybe a little pullback holds above 29. But I don't see anything so significant on the order flow other than like this pullback here. But yeah, this thing's just blasting. It's up another 20 points now from my exit, but no way of predicting that. It could have easily reversed back on me and I'd be saying, why didn't I take profit at my target? I would watch, like I went over, that trend line that is currently sitting like around 63.48 into 63.55, which is that 50% level. I'd be watching out for those areas. I would be watching out for those areas if we rally up there. Not that I'd be looking to short it necessarily, but I just either use it as a target or it could potentially set up, especially after we fill this whole low volume area from that overnight sell-off into that 63.48 to 55 area, which we're not too far from away now. I'd be watching out for that. And if we continue all the way up there without so much as a pullback, because we've basically gone straight up almost 40 points now with no pullbacks. Obviously, in hindsight, I can say, yeah, I should have held my trade, but there was no way of knowing we were going to go straight up 40 points without even a pullback. But given that we've gone so high so fast without a pullback, when we do hit those 48s, 55s, I'd watch out for long in continuation because we could quickly, sharply drop back. On really strong trending days, I like to look for those sharp, aggressive pullbacks and then wait for them to lack continuation to get a part of the trending move. Yeah, I many times close a partial and leave a runner. I did that today in a very minimal level. I just did half and half. I took half off for 2.5 R. I took half off for 5.5 R. R meaning like risk versus reward. It was actually higher than that because my risk was actually just less than 2 points. It was 1 point. It was 1 point and 3 ticks. So my risk was like 7 ticks, just under 2 points. So I'll have to just pull it into, I'm not doing math right here on the camera. I'll pull it into TradeZella and I'll pull a recap for you guys on Instagram, or I'll make a recap. All right, so that's the game plan you guys saw, the live trade you guys saw, and what I'd be watching for going into the rest of the day, which you guys just heard. So any other questions, just shoot me a DM on Instagram. I'll post a recap on there for you guys, but it's a nice one and done day. Love to have days like this. So hopefully, it looks like a ton of people actually caught it in the chat as well. If you appreciate these kind of live streams, I appreciate it if you guys just drop a like, share it. You know, let me know in the comments if you guys appreciate this. I'm doing this again each day this week to help you guys out. And I have some fun stuff planned for possibly next week, which I think you guys will like, a little series, mini series type of thing, and some other videos planned. Thanks, Little Potato. Thanks, Johnny. Thanks, Remy. Thank you guys for tuning in. Blair, thanks for joining. CC, thanks. Thank you guys for all joining in. Appreciate it. I'm glad you guys, looked like a lot of people caught that. Let me know in the chat if you guys caught a piece of that move based on the analysis. I don't recommend anyone copy my trades, but if the analysis helped you and you take your own trades with your own risk and it helps you, then that's awesome. Nice. Nice, nice, nice. Jay, great. Yeah, the low volume area too fast and it catch it. Yeah, that was a super quick one this morning. If you didn't get on it early, it was really hard to be a part of it. I can't tell you how many days like this I've just sat out of, guys. If you missed it, don't feel bad, like at all. I've missed this a million times. I have a playbook for that morning momentum setup, but like I said, it's like less than 10% of my trades. And if you don't get in early, it's actually, if you took nothing, then pat yourself on the back for being a good trader and not chasing a move without proper risk management, and also not fading a move that doesn't, it's just not a good probability. Nice. Blair got in at 9:41. Daniel missed it. Yeah. If you have the ability to miss a move and not fade it and not chase it, you know, pat yourself on the back, because that's a trait of a good trader. All right, guys. Thank you all for joining in. I'll see you tomorrow. Peace.